Okay, put your hand up if you once watched a YouTube video with evil background music, which stated that the true owners of the US Federal Reserve is a big secret and it's most likely the Rothschilds. Yep, I was once a subscriber to that theory. And this conspiracy theory is both easy and hard to disprove at the same time. So on the easy side, all the information is out there about who owns the US Federal Reserve. But on the hard side, it is incredibly complicated. And the reason for both the control and ownership structure of the US Federal Reserve is so complicated is that when it was drafted up, everybody was super paranoid. Nobody trusted anybody. And there are big and, I guess, legitimate fears that the wrong people would end up with too much influence and too much power. And so this structure has just got so many checks and balances just designed in its foundation. And so when they were drafting this up, not only did they have to appease the entire banking industry, but they also had to appease both sides of the political ideology spectrum, and they had to appease the leadership of all 50 American states. So it was drafted, and then redrafted, and then redrafted, and it was getting nowhere for about 5 years until all of the stakeholders decided to meet in Jekyll Island. And here, they created a draft that finally everybody could agree to. And this draft for the US Federal Reserve, it was nicknamed the Miracle of Compromise. So first up, who owns it? Well, the US Federal Reserve is owned outright by 12 district banks. And who owns these 12 district banks? Well, they are owned by every commercial bank operating in the United States. But it's not what you think. So every bank is mandated by law, and has been since 1913, to put 6% of their capital into the respected district bank. And also non-banking organizations and individuals cannot buy into these district banks either. This map here shows what banks from what states have to buy into what district bank. So if you're a bank operating in the United States, you must keep 6% of your available capital in that local district bank. But a benefit about this though is that if you do this, your bank will then have a financial backstop, which in turn will make you more trusted by every other bank operating in the system, because then the other banks know that your bank has a financial backstop. So this really much improves liquidity and money movement within the system. Anyway, for this 6% of your money that you have in this district bank, this will then buy an ownership share of this district bank. And for this ownership share, the shares cost $100 each. And they can't go up in value and they can't go down in value. They are $100 and they always have been and they always will be. And for this 6% that you have deposited there, just to keep the numbers consistent, this 6% will also receive a 6% dividend per year. So this 6% dividend was put in there so you're not being punished for putting your money in the district bank. You are at least getting a small return for it. That now gives us the question, what if a district bank makes more profit than 6%? Well, for any money that is earned that is higher than that 6% dividend, that is all then piled together and then given to the United States government treasury. And in 2021, that figure was $109 billion US. So with having an ownership share of this district bank, it's wrong to think of this as an investment, and it's probably more accurate to think of this as a bankers union or a bankers co-op. Therefore, if you want to own part of the US Federal Reserve yourself, all you need to do is buy some shares in a large American bank. So just a quick recap here, the ownership of the 12 district banks is a combination of 6% capital deposits from every bank operating in the United States. And these 12 district banks put together then owns the US Federal Reserve outright. So that's ownership, but who actually runs it? Who actually makes the decisions, and how does that side of it work? In regards to who actually controls the US Federal Reserve, it is a three-pronged system. And so we have the heads of the 12 district banks, which I was just talking about, and that's basically already covered. And we have the Board of Governors, and we have the FOMC. So first I'll get into the Board of Governors. The Board of Governors is an independent agency of the United States government, and it is financed by the US Federal Reserve. But although they're independent of the US government, all 7 of its members are appointed by the President and then confirmed by the Senate. And then after they are appointed, they must answer to Congress. And one thing that we really have to give credit for here, and the people who drafted up this US Federal Reserve, is that unlike the Supreme Court, which has lifetime appointees, the maximum term for a governor on the Federal Reserve is only 14 years. And they cannot serve consecutive terms. They can only do the 14 years and that's it. And another part about this ruling too is that the sitting president at the time can only appoint one governor on an even-numbered year on the 1st of February. Or just to paraphrase that, they can only pick one governor every 2 years. So with the time separation of the governors and also the term limits, this is a great protection exactly against what the Trump administration recently did with the Supreme Court and with stacking it with 3 people. And now the Supreme Court will be stuck with people with these ideologies for basically the next probably 30 to 40 years. Anyway, back to banking and back to this Board of Governors. It's the governor's job to represent the government in monetary affairs. That is the Board of Governors. And now we get on to the FOMC, which I'll talk about now. So the FOMC stands for the Federal Open Market Committee, and it has 12 members. And out of those 12 members, 7 of them are those Board of Governors that I was just talking about before. Meanwhile, the 8th seat is a permanent seat that belongs to the New York District Reserve Bank. And for the remaining 4, it is a rotational system of seats on an annual basis amongst the other 11 district banks. I don't know how New York managed to negotiate themselves a permanent seat when everyone else had to rotate it, but anyway, the miracle of compromise. And so now you may be watching this thinking, okay, that's great, but what exactly is Jerome Powell, or whoever comes in after him if you're watching this at a later date? Well, his role is as one of the governors, and so he was appointed by the president and confirmed by the Senate. So hopefully that answered whatever question you're wondering about in regards to who owns the US Federal Reserve. But now let's talk about the reserve banks from a few other countries. So in most cases, the ownership of the Federal Reserve or the National Bank or whatever it's called, wherever they're from, it's actually a lot more simple. So in the cases of my home country, Australia, countries like India, England, and in fact most of the world, the National Bank of Banks is actually owned by the government itself. And the reason why the Americans didn't do it this way is because they're very big on separating powers, which is why they kind of ended up with this bankers co-op rather than just letting the government have that power. And I guess that is a bit of a unique American characteristic of having a bit of a distrust of government. But there is one other bank of banks that has the same degree of complication in its ownership structure as the US Federal Reserve, and that is the ECB, or the European Central Bank. And this also is a miracle of compromise. And this is because they did not only have to worry about states within the same country, they had to worry about different countries. And to make matters even more complicated, they didn't all join at the same time. They sort of all just joined on one at a time as in subsequent years. And so the ECB is a bit of a miracle of compromise as well. But between the US Federal Reserve, the European Central Bank, the Reserve Bank of India, or the Reserve Bank of Australia, their reporting structures and job titles are basically almost identical. Anyway, as per usual, thanks for watching, and see you next week. Thanks.